Hi, I'm David Harmon. I'm with my business partner, Keith Cook, and we're with RE/MAX in Whatcom County. And we're going to give you a little synopsis of the last year. And we're in January of 2024. So we have all the numbers reconciled for 2023. So we'll give a little snapshot of the comparison of 2023 to 2022. And then we'll even dig deeper going back to, we might even go back to 2007.
Maybe.
If you have a time machine, join us.
Hang in there. It gets exciting. So we're going to start off. We have this kind of broken into 3 segments. And so we have information compiled from the Northwest Multiple Listing Service, which is the MLS, the Washington State brokers, most of them belong to. We also have the information which deeper dive real estates, and they have a lot more information that's put out a little differently. And then kind of for fun and just seeing not necessarily the numbers, but more the people and where does that come from. And we've got some stats from the Certified Residential Council that Dave and I are both members of. So with that said, this stuff will be attached. If you want additional information on everything, we're just trying to go over the summary. I mean, some of these pages are like 50-page reports. And if you are a number type of person, we can get you the numbers. We're just trying to, I guess not really have a vested feeling in how this goes either way, because we work with buyers and sellers. Usually we like to be as fair as possible with buyers and sellers. And there's some things I don't think were fair last year. I think they're going to, correct themselves this way. And so looking at this information, I think the numbers weren't fair based on interest rates and the stats, how it got juked. And you'll actually be able to see how the interest rates last year affected this. And you can actually go through year by year. So happy to discuss this personally with how this may affect your property individually. But what we're doing is just going over generics and generically what's going on. So, sit back and relax. And if you want specifics, let us know.
So this is for Whatcom County. So we had 2,774 homes that closed. And this is residential homes only. And this is a mix. So this is going to be existing homes,
single family homes and condos.
Yeah. In 2023, we had 2,258. So we actually had a decrease in closed sales of 18.6%.
Ouch. And that's where we're saying we think if where that was mostly related to was the increasing interest rates. We'll get into that later, but that's probably why that number is down. So looking through here, just looking at the bottom line is where were we on closed sales price for the year? We were actually down. So across the board, residential single family down 1.67% from 600,000 for the average of 2022 down to 590,000 for the average sale price of 2023. We only had 2,200 and 2,700 closings. So, roughly 200 some odd closings a month. And if you have a few of them that are in the lower price and then a couple of big, multi-million ones, it's pretty easy to skew the numbers one way or the other. But at the end of the day, you still look at the annual average, not necessarily the monthly average, because there was a huge swing in May. So in May for closed sale price, May of 2023 was the lowest of the year at $576,000. Versus the year before in 2022, 650. So kind of like polar opposites there for what happened.
Right. But then you jump to November, and then we had an 11% increase. So in 2023, this year, it was 623, and in 2022, 560. So
okay, so the second report, what we'll have is from the real estates, and it's kind of broken into a few different categories. So we're going to have, at least what we're looking at, we're not really paying attention to December. We're going to discuss year-to-date 2023 for all homes. That's new, existing, and condos. We're not going to pay attention to the foreclosures. So we'll look at the combo, and then we'll kind of break them out by segment.
Yeah, so what we're looking at is for residential sales. So this is all types of properties. They were down 22%. The transactions were also down 19%. So land sales were down 38%, commercial volume was down 17%, and the average residence was at 594,000, and that was down 3%.
And then so we compare that with new construction. New construction home prices were up by 5% to 718,527. The average price per square foot, interestingly, is down 3% to $334.58.
Yeah, but we did see, so on the new construction, if you look on the last page too, just hop in there, was that the lot prices actually went up 4%. So the new construction definitely saw, for either land and build, had an increase in 2023.
So then we go to existing homes. You're only a new home once. So existing homes for all of last year, 2023, units were down 27%, which is a pretty big drop. So we sold last year 1,966 versus 2,676. The average price was down 2% to $678,327. Interestingly, the price is a little bit higher for existing homes at $368. You could say 8-9% higher. It's still lower. It's down 3% from the prior year, but it's still higher than new construction. Interesting with the volume going down, and people will come up with their predictions. We'll do that after we do the attached. So with the condos, where are we at on the condos?
So the condos, townhomes, definitely a lot more affordable. The existing sales were average $450,000, so that was up 2%, so a great value. The new construction at $515,000, up 10%, so definitely a solid market there. Price per square footage for brand new construction was $344, so that was down 2%. So I think, just definitely seeing, when you really look at what's out there, inventory-wise, you have 3.5 months worth of inventory when it comes to townhomes. So definitely a strong buyer's market in that. Not the greatest if you're selling in that market, but the values seem to be climbing. And if you look around, that's probably one of the biggest areas where you're seeing new builds is in the townhomes as far as volume and affordability, I guess.
So looking at all of these phases, so look at the average together and then kind of look at the components. So on average, just saying we're down. It's interesting that we're up in separate areas. So, but new construction's up. So it's like, well, what's causing that? And I think there's just a lot going on in the world that's happened. There's just a lot going on in the world right now. So let alone, politically, wars, and politics and presidential races and just all of it's just an odd time. And then you throw in interest rates and just the economy and the border and all this other stuff. But the biggest thing real estate-wise that I see is where the rates were super low. So you had some of these people who were going to probably plan on buying or selling last year, but they didn't because their current existing home is locked in at a great interest rate. Right. So there's homes that are in the 2, 3, 4, 5% interest rates. Well, right back here, we were looking at throughout the year, 6, 7s and near 8s. And so people just weren't wanting to trade their house that at, say, 3% interest to go into a 7.5% interest. Because usually when people would move and, when you start up the ladder, starter house move, and a lot of times you're not going to move from move a 5%, you're going to move like a bigger move. So usually you move 1.5 times the amount of your existing house, just what would happen. And so, but if you're moving 1.5 times and the interest rate is double, I mean, you could just move and sell a $500,000 house and buy a $500,000 house, and it's going to cost you 1.5 times the amount of that, or double the amount, just based on interest. So I think we should see some correction this year with the prices coming down, and people had sticker shock with these rates because they were just hammered. They were just going up every couple weeks. Right. And so I think we have, there's not that and people just didn't know when it was going to stop. So I think this year it's corrected. We're on our way back down.
I would say all in all for 2023 kind of started out the year with a lot of chatter throughout the news and the market, with different people making prediction about the sky is going to fall. There's going to be a collapse. Hold on to your, loved ones because, the earth's going to shake and the houses are going to fall down. But I guess in the end, in our county, anyways, at being down 3% for the average, in a market where our rents in the area went up 12.6% for rent, for buyers that got into this market, even though they might be paying a higher interest rate. Most everybody that we've dealt with are happy that they got in even during the market where they're at right now. So
I would say greener pastures ahead. I think good interest rates make it, equal for buyers and sellers. That's what we want for the most part. It's not a buyer's market, not a seller's market, but a nice mix of a market. I've seen right now, and we're not necessarily making predictions here. I don't see any reason why we're not going to, I would say improve on last year. I've seen some TikToks or YouTubes. If you're looking at real estate, people say it's going to go up, say it's going to go down, it's going to do everything. I'd say make your own decision. A lot of times on residential housing, people need to have a home regardless. So you might as well have a home and pay it for it, because regardless, I would rather be sitting here in my retirement not having a mortgage payment versus having one. So the only way to not have a mortgage payment is to own your house or live on a boat or camp. And one more that kind of goes into like who the buyers are, where they come from. This last statistic is through the Residential Specialist magazine that we get, and that's nice. Optimism. So this is just interesting from where, who are the buyers, where they're coming from, and so we thought we would share that one with you as well.
Yeah, so if you look on there, you'll see the Gen Z. They predicted them to be like 20% of the buyers, which they ended up being successfully at 17%. The millennials were anticipated to be 43. It's like a race between the different generations. It looks like it's kind of funny. They ended up being 37. The Gen Xers at 27% ended up being 23, and the baby boomers are the leaders of the pack because they were the underdogs here, only at 10%, but they ended up being successful at 21%. So yay for the baby boomers.
Well, interesting. The silent generation. We actually helped a lot of the silent generation. It seemed like last year was our year, and it's funny that was triple. Actually,
Yeah, they were
way up. I don't even know how to read that with the minus
below 1%.
Below 1%. They came up to 3%, and so there was a lot of movement there. So looking at getting housing and what you can do to actually double your money, you're not going to get that put in a car. It's not like a stock where it can go up or down. I got a lot of stocks that know how to go down. So this is something with real estate, you'll own it, control it, see it. So we believe in it, and it's a good personal growth tool. It's a good retirement tool. It's a good just take care of yourself tool, because it's our belief that everyone should own some real estate, because it's the safest thing you can do in your life is something predictable of not having rent. With rent going up, what, 12%?
12.6. Actually, in Bellingham, it was 16.8, I believe.
So yeah, if you're on a fixed income and that rent's going up that much year after year versus just, stuck in with your property taxes. And if you're elderly or if you're on a budget, then we can look at getting your property taxes kind of frozen or adjusted. So I think owning real estate is the safest retirement plan out there.
Yeah, definitely. Yeah, and if you have any questions, whether what we think the market's going to be, you want to discuss your real estate needs, selling, buying, or investing, or just have some general questions, feel free to reach out, because we're not the gurus. We don't have a crystal ball, nor does anybody. But we think the market in 2024 is definitely. Hopefully, we're going to see. The predictions are for lower interest rates, so I think it's going to be a great year. I think there's, we're going to be getting into an election year time frame, so that's always interesting.
So if you're data driven, hopefully you like the data. Like we said, it's attached, and we have more data supporting, so happy to help you out that way. And take a lot of this with a grain of salt. This is it's averages, and everyone is unique and has their own situation, whether you're buying or selling. We're happy to meet with you and go over what's going to work best for you and your family if you're buying property, and what our predictions are, and what the type of housing you're looking for, or what type of investment. And if you're selling, the same thing, like what's the timing for selling and what's going to work best for you. So we'll be happy to not be so, I guess, vanilla and give our exact strong predictions on what's going to happen on your specific situation. But for this video, we're just trying to be, not really pro buyer or pro seller, just kind of delivering the information that's out there. And we didn't generate this. We're just chirping about it.
Thanks for watching.
And if you're looking for more real estate information, be sure to check out our website, BmR&x.com. We've got a lot of cool links that we think are great if you are interested in real estate.
Also, check out our YouTube channel where you're going to find some more information regarding Bellingham. We have a Bellingham and Beyond series that goes into some of the parks and some of the great things that the area has to offer, as well as there's some educational videos talking more about some real estate stuff that you might find interesting. So thanks for sticking with us.